All right, everybody, we're going to start now. The title of this webinar is The Good Corporate Citizen, Communicating Corporate Social Responsibility in Advertising and Social Media. And the idea of this webinar series is to bring two attorneys from Loeb from different departments that work together that you might not think would typically work together. So I am going to start out, and I am a partner in our advanced media and technology group. So I help brands with their advertising, especially on social media. And then after I go, you're going to hear from Diara Holmes, who is the co-chair of our nonprofits and tax-exempt organizations. And she is going to talk to you about the different ways that corporations can partner with different charities. So let's get some of the the business out of the way before we get into the fun part. All the opinions expressed during this presentation are neither reflect the views of Loeb and Loeb or our clients. And one of the most important things about this webinar is the CLE. Because I know you guys all want some CLE credits here. You should have received a sign-in sheet and an evaluation earlier today. So you'll have to fill them out and then submit them. And the most important thing is halfway through this presentation, we will give you a CLE code, and you'll need that to put onto that paperwork. So look out for that CLE code, and we'll stop and read it for you. This is the agenda of what we're going to talk about today. First, we're going to talk about social issues and consumer expectations. Then we're going to talk about social media platforms and social issue advertising and some of the rules associated with that. And then Diara is going to take over, and she's going to talk about the ways to engage with charities. That's going to be, and she's going to talk about some easy and simple ways to engage with charities and some of the more complicated ones. So today there are a lot of different social issues that brands have started to engage with. We have everything from Black Lives Matter, COVID-19, voting issues, Me Too, social equity, and LGBTQ plus equity too. It's a very charged environment. You have people for some of these issues that are on both sides and feel strongly on both sides. And it really kind of leaves brands sometimes in a quandary on how to address some of these issues. It is, though, important that brands really address these issues. We've seen that the public trust in government has really declined. Recently, only 2% of people trust Washington to actually do the right thing all of the time, and 22% trust them to do the right thing most of the time. Also, the trust and confidence in media has declined. Over 50% do not have confidence in the media, and only 6% have a great deal of confidence in the media. So there's really this void of where people don't really know who to trust, and corporations really are trying to step in this area. So what happens with social issues and consumer expectations is that really consumers want and expect that brands are going to make statements and engage in these issues. There was a survey that was published by Digital Media Solutions, where 77% of respondents expect brands to be helpful throughout their everyday lives. And 75% of consumers stated that brands should also be informing the public about their specific efforts to combat any type of social issue. And this isn't only really about taking action during the pandemic and during some of these, some of the social issues that have arisen recently, but 87% of consumers have said that they're more receptive to a brand's message if they know what that brand's beliefs and values are. Respondents said that knowing a brand's beliefs and values makes them trust the brand more. and they are more likely to think that the brand is authentic and to identify with that brand. So it's important that these brands do make these types of statements. But at the same time, consumers are very skeptical of brand statements. 75% of respondents have stated companies should not exploit the health crisis, the pandemic, as a way to promote their services or their products. And consumers still remain very skeptical about these brand statements. Many of them feel that that these companies are engaging more for their own profit. Say that 64% say companies vocally support the Black Lives Matter movement in order to retain customers. And 35% said they think brands primarily are engaging with this topic for good publicity. So this really does kind of leave you in this area of not knowing what to do and what to say and how to say it. And I think this was exemplified with the Chauvin verdict. Some brands did make statements after the Chauvin verdict, but not as many as that did after George Floyd's murder. And part of the problem and the issue was for these brands was that, according to Morning Consult, consumers were evenly split on how to respond to the Chauvin verdict. Now, at the same time, if you don't respond and you don't do anything, saying nothing can also really cause problems for a company. And one example of that is Coinbase. So the Coinbase CEO refused to have the company make any public statement in support of Black Lives Matter. And in response to that, his employees actually staged a virtual walkout from work. So unfortunately, it sounds like we're not going to be able to see this Colin Kaepernick video. This is one of my favorite videos. This is the Colin Kaepernick video where it says, where the tagline is "Believe in something." This came out, and it was really a way for Nike to show support for Colin Kaepernick after he was not supported for his actions in the NFL. There was a little bit of a backlash to this video, but it was small. There were some statements on social media. Some country stars made some negative comments about it. Donald Trump made a negative comment suggesting that Nike was getting killed with the anger and boycotts. Really, that just wasn't true. This really was a successful campaign for Nike. And one of the reasons I think this was a successful campaign is because Nike didn't just air a video. They really supported Colin Kaepernick. They made him the face of their 30th anniversary campaign. Kaepernick also persuaded Nike to cancel their Betsy Ross flag Air Max sneaker drop. He found, and others found it offensive to have the Betsy Ross flag on the back of the sneaker as part of the embroidery. And because of that, Nike actually recalled all the shoes and did not continue with the drop. And I think it is very important to support these spokespersons, to show that you are supporting them, especially in times of crisis and need. And Nike and many other brands were very supportive of Naomi Osaka when she was having a mental health crisis. So if you don't know who Naomi Osaka is, which I'm hoping that most of you do, she is the 12th highest paid athlete in the world. She's tied with Tiger Woods. She is the highest paid female athlete. She has supposedly made around $55 to $60 million in the past year. She's a tennis player, and she dropped out of the French Open citing mental health reasons, and she cited her battle with depression. And she actually skipped a news conference because she was did not want to have to answer so many negative questions. She was getting a lot of negative questions about the way she was playing. And then she also decided to skip the German Open and Wimbledon. And the first time I believe that she came back was during the Olympics, the Summer Olympics this summer. Nike actually issued a statement, and they said, "Our thoughts are with Naomi. We support her and recognize her courage in sharing her own mental health experience. Naomi Osaka's decision reminds us all how important it is to prioritize health and well-being." MasterCard, another one of her sponsors, said that they support and admire her courage to address these mental health issues. And it was really interesting that not only her sponsors really kind of came out to support her, but Calm, which is an app that it's a guided meditation app, offered to pay the $15,000 fine for any other player opting to not attend some of the press conferences associated with the Grand Slam. And they also made a donation to a mental health organization in France on behalf of Naomi Osaka. Now, unfortunately, we're not going to be able to see this ad, but this is another. Oh, excuse me,
Narissa, or maybe I'm speaking to our marketing people, but I do think it's possible to go to audio settings and say go to audio and do speaker, same as speaker.
Oh,
if you have that ability.
Yeah, I don't know that I can
okay.
That I can do that.
Okay.
On the fly. So I will. I'll just talk about this ad. This ad is. It was called "The Best a Man Can Be," and it came out in response to the Me Too movement. And it really it showed men doing and boys bullying others. There was some mansplaining during the ad, and it really said that men have to do more to avoid some of the this negative behavior. And it really was intended to kind of to hold men accountable for the actions of other men. There was a backlash to this video. There were some minor celebrities that came out and spoke out against the advertisement. Piers Morgan said something against the advertisement. Bernard Carrick, who is the former NYC police chief, criticized the video and said, why is there a razor company telling me what to teach my son? The YouTube video had over 300,000 downvotes, and as compared to 65,000 upvotes. So there was some negative publicity. It was really that that the message, while it could have been a good message, upset their base. In response, Gillette's North American brand director told CNN that they did expect some debate from this ad and that they felt that the discussion was necessary, but they wanted to clarify that the video was not about toxic masculinity. It is more about men taking action every day to set the best examples for the next generation. Again, this is another ad that came out prior to BLM. It was in 2017, and it was an ad where Kendall Jenner is modeling, and there's a protest going on outside, and she kind of ends her model, like whatever she's doing, that she's modeling, and goes out into the protest. It's obvious that the protesters are quite upset. There are police officers there, and Kendall Jenner then takes her Pepsi and gives it to one of the police officers, and then all of a sudden everybody is happy, and the protest becomes very peaceful. there was, a definite backlash to this ad, that people kind of felt that, there's just no way that a Pepsi can is going to make the world peaceful, and it really belittled some of the issues that were involved in this protest. It also, really evoked a lot of imagery from the civil rights movement, which people found offensive. Pepsi apologized and pulled the ads. Their statement was that Pepsi was trying to project a global message of unity and peace and understanding, and clearly we missed the mark and we apologize. We did not intend to make light of a serious issue. In addition to that, Kendall Jenner also apologized during her during her television show, Keeping Up with the Kardashians. And during that time, that the perception levels that Pepsi had went to, for several months, went to the lowest that they had been in many years. So now we're going to talk about brands making corporate statements on social issues. This is just a meme. It was that was created because so many brands made these statements after George Floyd's murder in support of the Black community, and they were all Black and they had white writing. There were very generic statements, and this is an example of it. They all kind of looked the same. Some examples were the NFL, Amazon, Marvel, Billboard, and PlayStation all had statements that looked very much like this. Some of the most criticized ones were, like, for instance, the NFL, because of their treatment of Colin Kaepernick. And then there were some statements that were considered tone deaf. For instance, on Blackout Tuesday, Tiffany ran a post with the Tiffany Blue Square with a lot of different, happy pictures, and they said, "We are one community and we #believe in love." And people felt that really was not addressing the issue at hand. Here are some other examples of some issues that have come up in the past. L'Oreal made a statement after BLM, and the one that says "speaking out is worth it." And they were quickly criticized by Monroe Bergdorf, who was the first Black queer transgender model for L'Oreal. She was hired in 2017, and just a few days after she was hired, she made a post about white supremacy after Charlottesville, and they fired her because of that post. And so she was quite angry after L'Oreal posted a message in support of BLM, and she made a post really criticizing L'Oreal in some very harsh words. And they actually decided to rehire her and put her on their diversity and inclusion committee. Another example here is the In the Style, which is the two women wearing the t-shirts. This was a t-shirt that was put out, and some of the proceeds were supposed to go to the Black community, or a charity that was helping the Black community. And there was a lot of criticism because this brand did not have any posts that included minorities for many months prior. The other one that I think is very interesting is the Nextdoor platform. It's really a kind of, you got to know your own product. Nextdoor is a platform where people would tweet out messages about what's going on in their neighborhood. It has been accused and has a reputation of racial profiling. And then also in the wake of the George Floyd murder, the Nextdoor moderators were pulling down a lot of content that had to do with BLM. So their support of BLM was criticized because of the way that they were handling their product. Brands can have, when they do make these types of statements, it's best when they really are backed up by some sort of action. That you don't just make a statement on social media. Some examples of that are Ford, who was the first car company to offer COVID-19 payment relief, but they also were creating ventilators and air filtration systems. Guinness had a St. Patrick's Day ad of hope that they put out very soon after the pandemic started, but they were also donating to local communities, and they were using their breweries to bake bread for local communities. And the other thing that you really have to be careful of is that what you can do and what you should be doing changes over time. So 15 years ago or 10 years ago, maybe it was all right for the brand to just during Pride Month to change their logo to the rainbow colors in support of the LGBTQ community. But really, we have progressed to a point that that is not enough. And brands that were just changing their logos or selling merchandise that in rainbow colors were really getting criticized that they need to invest in the community, and they have to start to speak out against legislation that may be detrimental to the LGBTQ community. And I think a really good example of a brand that did that is Skittles, which is they did an entire campaign during Pride Month that had many different facets. They partnered with 3 LGBTQ plus artists, and they put up murals across the country. They had some influencers, LGBTQ influencers, who were sharing their stories. And then they had something called skittlesqueercodes.com, where it was a site with content and stories and artists from the LGBTQ community. And then they also had, and this is something that we're going to talk about in a little bit, they had a CCV where they would donate $1 per pack to GLAAD up to $100,000. Again, if you're not going to say anything, that can be just as bad, and that can have a very negative impact. Basecamp actually is a company that tried to end all discussions on societal politics on their work Basecamp account. They felt that they said that they were not healthy. It was a major distraction. And then many employees started to quit, and Basecamp had to offer to buy out those employees that wanted to leave. So, so now I just want to kind of talk about what social media platforms and their limitations on political and social issue messaging. I think that this is something that you might think these rules that social media platforms have may not apply to you, because as a brand, they may not, you're a brand advertising a product, so you're not making a political or social message. But in reality, some of these rules for these platforms are quite broad, where if you are making some of these statements that we're talking about, you could fall under those rules. And I think that the best example of that right now is Google, who just changed their ad policy, their election and political ad policy. So in February, there's going to be a change where that advertisements for products and services are no longer exempt from the political and ad policy. So if you have any ads that are featuring office holders or candidates for federal or state office, those would have to be approved by Google. It also includes if you have any advertising that is at a state where there's an initiative or proposition at a state level that is qualified for the ballot. So there can be times where some of the social messaging may fall under that category, or you may have someone in your advertisement that falls under either a candidate or an office holder, and those would then be considered political ads. I think another one that I think is pretty broad is TikToks. prohibit the really any type of political ads, but they define it as no content that advocates a stance on a local, state, or federal issue of public importance in order to influence a political decision or outcome. I think that can be very broad, because there are a lot of issues that are of public importance that if you talk about would then may influence a political decision or outcome. So I think that the other one that I think is pretty broad is Twitter prohibits the promotion of political content, and included in political content is anything that relates to a judicial outcome. And I think that there are times, especially with some of the challenges to abortion rights and some of the high profile judicial cases that we had, that brands could run afoul of that. So now Diara, I think you might have a couple things that you want to say here, and then
That was really interesting. I would just add on this particular point that in the event that you're talking about content that's being co-messaged with charities, where there's a charity involved either in the messaging or getting a shout out somehow in the content, be extra careful, because of course charities are prohibited from making any statements that would involve a candidate, or vote for, vote against, election, anything that would fall under the category of campaign intervention or electioneering. I don't think charities would have any problem messaging wise with a Black Lives Matter or a defund the police type of message, but it sounds like Twitter or TikTok would. So
I think that's right. So now is the big time for the CLE code. It is GCC 12. And then I am going to pass this off to Diara to talk about the ways that companies can engage with charities.
Thanks, Narissa. And I must say it's a pleasure. Narissa and I get a chance to work together on exactly this docket from time to time, but not often enough. So this is really a pleasure to get to hear the advertising perspective. And now I'm going to bring the sort of tax law perspective, because I tend to represent, I would say, more than half the time when I'm looking at a CCV or a corporate sponsorship deal, I'm looking at it from the charities perspective. Definitely, I advise brands, just as Narissa sometimes advises charities, but for the most part, I come at it with the 501c3 or sometimes 501c4 lens on these written grant agreements and corporate sponsorship deals that we're talking about. So I think this is a good chance for us to add that filter as we talk about some of these examples. This isn't all the ways, but it's certainly some of the key ways that I think align with the messaging that we've seen in the last couple of years that Narissa's been talking about. So let's dive right in. I'm going to try to go, we sort of picked out a few of the key examples of structures underlying some of these cause marketing campaigns that we see pretty frequently. Feel free to put questions in the Q&A and we'll try to get to them. If not during this presentation, we'll follow up with you. But I tried to go in order of, I'm going to say sort of the simplest and least, I don't know, regulated, requiring the least amount of disclosure and reporting and that kind of thing. Pause while the ambulance goes by in the background. But so let's start with direct grants and contributions, which probably doesn't need that much definition. Narissa, would you mind turning the slide, please? Thank you. So here's a good example of, obviously a great way to engage with charities is to provide them funding to do what they do. This goes for 501c3 organizations and 501c4s as well. They are fundraising entities that need recognition and need funding to do their work. And in this example here, this was in 2020, Nike announced, I think the headline was our commitment to the Black community. And the context, the message sort of intro paragraph that was posted with these bits that we've posted here was addressing systemic racism in America requires urgent action and sustained engagement. And Nike Inc. is committed to both. It was a very powerful statement followed by detailed explanation of which brands collaborating we're going to be giving to which charities and for which reason. So it said Nike, Converse, Jordan Brand, and Michael Jordan committed a combined $140 million over 10 years to invest in and support organizations focused on economic empowerment, education, and social justice to address racial inequality for Black Americans. So these snippets that we took out here were just highlighting some of the organizations. But if you go to the announcement, I mean, we pulled this publicly. I was tracking it for specific clients at the time. But if they reposted it and sort of bragged about it, appropriately bragged about it on Giving Tuesday as a look back over their contributions that have been made to all of these organizations and continue to be made, and to amplify the nonprofit organizations that they're supporting. So this is one easy way as we go. I'm not saying it's easy because it's a $140 million commitment, but easy in the sense of regulation. Clearly, there are written grant agreements with each and every one of the charities that are listed, but this is not a CCB. There is no purchase required. There is no future action. No doubt, Nike was hoping that the charities would amplify their message. We can talk about that when we get to other examples, but baseline, making grants to charities and bragging about it with an authentic message committed to social justice works every time. Any comment on from the advertising?
Yeah, the only thing that I would say is if you are going to be advertising your promotion or advertising your donations to charities, is that you really do need to have a license agreement. You are especially, you're going to want to be able to use their logo and their name to be, and you do need a license agreement to be able to do that. I saw just really quickly that a couple of people asked for the CLE code again. It is GCC 12. So GCC 12. So hopefully that one was clear.
And thanks for mentioning the license agreement, Narissa. A lot of times we see agreements where it's sort of a little bit David and Goliath, and the charity is the little guy and they pretty much sign what they're given. Sometimes you come across charity brands where the charity's brand itself is a global, prominent international brand, and they have very, very specific requirements around use of their name, their logo, their font, their color, just like the corporate brands do. And so when you're going to be doing a sustained announcement of any kind, announcing the charity, amplifying charity, many times these prominent national charities will have requirements of their own. Next slide, please. So let's look at the next, I'm going to call it the next step up. Corporate sponsorship. It means a lot of things. It probably conjures up different things, different concepts in the people who are on this call from marketing than it does from the people who are on the call from the finance office or legal. I'm going to bring a charity sort of tax lawyer lens to this for a moment, because most of the calls that I get from the brand side, it goes something like this. The charity is telling us that they can't say X. They can't amplify the message we're asking them to amplify, or they can't put this in store, this product in their store with our logo on it, or whatever. The charity is telling us X. Is it true? They're telling us that their 501c3 status is going to be in jeopardy, or that they're going to be subject to tax. Is this true? These are the types of calls that I get most of the time from the brand side. So I just want to sort of demystify it just a bit. I promise not to go, for an hour on about tax law, but just the basics I think are really important and helpful for the corporate side, the marketing side, when you're negotiating with a charity. Even if from the company's perspective, it is not necessarily in your charitable contribution bucket. That is to say, even if you think of it as a business expense, a marketing expense, you've got to know that from the charity's perspective, it is really, really important, and they're trying really hard to prioritize the bucket that will allow them to report it on their Form 990, that's their annual return and their financial statements and their annual reports, that it was public support, that it was a contribution, that it was a gift, that it wasn't a payment for services, that it wasn't a payment for advertising. And the tax code actually incentivizes them to push back on you in that way, because there's a safe harbor called qualified sponsorship payments, where the dollars that fall into that safe harbor will not be taxable and will be treated as a donation, as public support. Whereas all of their categories, and we could talk about complicated corporate sponsorship agreements where there's allocation required between in among bucket. But if we can get as many dollars as possible, so let's say you've got $1 million sponsorship payment, the charity really is hoping that all of those $1 million can count as contributions. If you're asking the charity to endorse your products, if you're asking the charity to make statements that amount to endorsement or retweet messages that are essentially commercial, they're going to have to do an internal calculation and allocate. So we have that $1 million sponsorship payment. How much of it was for a contribution and how much of it was really for advertising? Because that portion of that contribution that is attributable to advertising, you're really paying the charity for the service of advertising at that point, and they're going to have to pay tax on that revenue. Some charities can afford that. It isn't illegal to pay unrelated business income tax. Some charities have already merchandising deals and all kinds of other things that are generating unrelated business income that they're already paying tax on. They already know how to report it and deal with it. And maybe it doesn't affect their credibility with their stakeholders that they're taking taxable dollars in advertising for products. But for some charities, this is a big deal. And that is why they're pushing back on things that seem like endorsement. So a qualified sponsorship payment is a payment by a company with respect to which there is no arrangement or expectation that the payor, i.e. the brand, is going to get a substantial return benefit. Substantial return benefit, I made that red. We could do a whole seminar on what's a substantial return benefit, and this is the fun part you should call us about if you are negotiating and have questions about this. But substantial return benefits include advertising. This is a big one. Exclusive provider arrangements. Everybody wants to be the exclusive provider of their line of products, services, what have you. Charities are always going to push back on exclusive provider arrangements because that immediately kicks them out of the qualified safe harbor that I mentioned. Exclusive sponsor, sure. Exclusive provider. Now I'm going to have to figure out that whole dance I just talked about with advertising and allocation. Also want to just point out corporate sponsorship agreements can involve cash, in-kind contributions, underwriting a single event, you know, the charity golf classic, funding the wing on the hospital, a building or a facility, or just general operating support, right? The season sponsor of the opera season. So we see all of these examples. Narissa, next slide, please. So as I mentioned, there are different types of benefits that are going to be triggering, not just for tax, but for negotiating complexity that you're going to experience when you're negotiating a corporate sponsorship deal with a charity. One of them is a payment contingent upon the level of attendance, broadcast ratings, or other factors that indicate the degree of public exposure. So this is actually a line straight out of the regulations and the unrelated business income tax rules that apply to charities. They're not supposed to be, if they want it to count as a donation, again, they're not supposed to be conditioning the sponsorship payment or having that gradual scale where you get paid more for more exposure. Well, of course, if you're the brand, that's exactly what you want. So this is a little bit of a tension. For the national charities, again, they may have more tolerance for this kind of thing. They may have the sophistication and counsel and financial advice to do that allocation so that some of the payment, or maybe that you may negotiate with a charity that has separate agreements. There may be one agreement that they're calling the qualified sponsorship agreement. And they may ask you to sign separately an advertising agreement where you're going to actually take out ads. Separately, a license agreement where you're going to allocate portions of what you're considering the sponsorship payment on your marketing side. But to the charity, it's coming in 3 streams: the advertising stream, the qualified sponsorship stream, and the royalty for use of their logo and brand, which is that license agreement. So these are sort of conversations that really depend on the charity and their situation. So one practice tip I would suggest, if you're not already doing it, if you are a corporate sponsor, you're contemplating, starting negotiations with a charity for a complicated corporate sponsorship, go ahead on GuideStar, www.guidestar.org, which is one of the main platforms where you can find charities returns publicly available going back usually a decade. and look at their last Form 990 and take a look. You can see what kinds of revenue streams they're used to, accustomed to, and that will help you know whether they're truly worried about that advertising revenue or whether maybe there's something else there. Like maybe they don't have a problem advertising products, but they actually have an exclusive deal with another brand. You won't know that if you don't study the charity's context. Next slide, please. Thank you. So how do you know if it's advertising? Generally, any kind of acknowledgement or just plain old expression of gratitude is going to be fine. Thank you, Company X. You know, Company X supports our mission. You know, putting your logo on the company's website. Plenty of charities thank all of their preferred donors and sponsors above a certain level on their website. They can even put links if they want to. They can't put a link to a page. They're not going to put a link directly to a page where it's like, purchase this product here. But thank you to our sponsors with logos and links is not problematic. What is problematic? Qualitative comments about your goods and services, comparisons, you know, superlative statements, and of course, outright endorsements. So the things in the statements in the red box, Company X makes the best products, you know, eat at this restaurant. Our founder and employees use these services all the time and we love them. Those types of things you're going to find charities pushing back on in negotiations because, again, that's advertising. That would require them to treat some, maybe not all, but at least some of the sponsorship payment as taxable, and they don't want to. Narissa, did you want to say?
Jump in and say, if you are doing those types of things, you have to make sure that you are complying with the FTC endorsement and testimonial guidelines, so that, you know, the product is actually being used, that the people who are saying that they love it or that it's great really is, and if you're making comparative claims, you may have to substantiate those. Absolutely.
Next slide, please. I want to get to commercial co-ventures shortly. So I just wanted to point out one example. This is pretty common too, where you have, you know, a lot of different elements. And if you have a company foundation or a company affiliated charity, it's pretty common to see multi-party corporate sponsorship deals. This one we just took off yesterday off the website of Dick's Sporting Goods. In this example, the company is making its commitments and the company affiliated charity is making distinct commitments. So the charity is actually soliciting donations. You can see there in that little box, because even though it's the foundation, I believe it's a publicly supported charity because they raise money from the public and from their consumers. So they're actually collecting and telling you, you can make a tax deductible contribution, and they're going to support young athletes to buy new equipment for athletes who are underserved. They also make grants to 501c3 charities that are in the same cause, helping young athletes in underserved communities. The company, in turn, is going to do point of sale donations, maybe in a roundup kind of a way, and conducting social media outreach. And then the company is adding an employee engagement piece to it for internal employee morale purposes. There might be a volunteer engagement and also possibly even desktop giving type of a function. I didn't dive into this. It's not a client, so I don't know the details, but this is what I'm discerning from their messaging. So this is sort of, like I was saying, there are different lanes, right? And if you have an affiliated foundation or if you have multiple parties, sometimes the charity has multiple parties. These complicated national prominent charities, bear in mind, sometimes there's an affiliated 501c4 organization that's the advocacy voice of that charity. Sometimes there's for-profit subsidiaries that are perfectly happy to engage in the advertising piece. And so you may find that negotiating one of these corporate sponsorship deals involves multiple parties on either side of the table. Like I said, we could talk about corporate sponsorships all day, but let's move on to commercial co-ventures because they are all the rage and just as interesting. So the key thing about commercial co-ventures that if you take nothing else away from this presentation that I want you to hear is that it really depends on the state law. And it depends, the registration, the disclosure, Whether you need a written grant agreement, of course, you need a written grant agreement because we're going to advise you to do that every time. But whether the state requires you to have a written grant agreement, it is so state specific. You want to pause when you start thinking about connecting donations to purchases in a national promotion, advertising campaign that's going to go, multi-state. You want to pause and you want to think about each of the states where the promotion is going to run, and you're going to have to look at their laws separately. Okay. Generally speaking, we define commercial co-ventures as a promotion that advertises to consumers that their purchase of a product or some other action that they're going to take. Maybe it's retweeting, maybe it's amplifying the company's message in some other way by, clicking here, the number of clicks, the number of tweets, whatever, some action taken by the customer will generate a donation or a benefit to a charity. And I'm saying there in that general statement for charity, but in some states, even saying to a charitable cause will trigger a commercial co-venture. So the typical scenario is 10% of our net profits from the sale of this product will be donated to charity. Or maybe it's charity day, 10% of our net profits from sales this week will be donated. A lot of Giving Tuesday focused CCBs we saw. Or maybe it's we'll donate $5 to XYZ charity for every qualifying product purchased, this season with a team affiliated charity. So I won't go into the details of the state laws, but trust me when I tell you, you really need to double click. There are actually only 6 states that require registration by the brand: Alabama, Hawaii, Illinois, I think Mississippi, Massachusetts, South Carolina. But a lot of states have different requirements involving written grant agreement, so written CCB agreement. So even if you're not required to provide it to the state, you have to be prepared to show your grant agreement upon audit or attorney general investigation. Next slide, please, Marissa. I want to also just comment that while I was just focusing on the brand's perspective just now, because the onus of registration of the commercial co-ventures in the states that require it does fall on the brand, it's also critical for the beneficiary charity or charities. And this is another wrinkle in the negotiations that I sometimes get calls about from the brand side. Before you enter a CCB agreement with a charity, you got to make sure that the charity is registered to solicit charitable contributions in the states where your promotion is going to run. So I'll give you an example. The charity operates, it's regional. It's not like a local soup kitchen, but it's a regional charity that serves a population in the tri-state area, mid-Atlantic, let's say. So they're registered in Maryland, Pennsylvania, New York, New Jersey, Connecticut, what have you, but they're used to focusing on their region. You come along and you're a national brand and you want to do your CCB online, i.e. in every jurisdiction, or in stores across the country. In that case, the charity is going to have to step up their game because you're not in the states that require registration. They won't receive your registration if the charity is not already registered on their books. The simple fix, when I'm representing the charity, the simple fix, sweeten your deal a little bit. Give them the $5,000 that it costs to do registrations in all of the places that require it. You can do multi-state registration pretty affordably, but until they came along to the CCB, they didn't have a reason to do that. And so they may need a sweetener. Minimum threshold donation amount can also help make it worth the effort, because once a charity is registered in South Carolina this year, they're going to start getting periodic reminders to stay compliant with South Carolina. So signing up for your national promotion actually costs them something. Marissa, I saw you lean in. I think you wanted to say something.
I was going to say that if you are going to limit your the states in which you are running a commercial co-venture because the charity is not registered there, that would be considered a material term, and you're going to have to disclose that so that the consumers know that purchases in whatever state are not going to qualify.
Great. Can I ask you to flip just to the next slide? Then we're going to skip a few because we're tight on time. Not that one, because that was video. Keep going. Yes, this is my favorite one right now. It's so juicy, no pun intended. It's just really great. This was KFC's commercial co-venture with Blessings in a Backpack program. For every sale of KFC's chicken sandwich, they donated $1 to Blessings in a Backpack. And you can, and this was all on November 30th. Was it Giving Tuesday? Yeah. So with a minimum guaranteed donation of $250,000 and a maximum donation of $300,000, this pretty much makes Narissa's point.
Yeah, so this is what's in here is very important. The fact that it's going to be limited to a sale on a specific day, that is going to be a material term that you're going to have to disclose. In particular, the other thing is the maximum donation will have to be disclosed. It's it's important to also disclose the minimum donation, but really important is the maximum donation, so that customers may realize that their purchase is no longer going to trigger a donation. I mean, this was a very short CCV, so I don't think that if they did hit the maximum, they probably didn't have time to pull the ad. But if you have a very long CCV over many months, if you hit the maximum, you may have to start to pull those ads.
Great. Narissa, would you do me a favor and just go to third-party charitable platforms so we can talk about them just briefly? Yes. So for corporations that don't have an affiliated company foundation or don't have the internal infrastructure, staffing, resources, wherewithal, or just tolerance for maintaining a long-standing program on their own platform, there are a host of internet-based platforms and third-party providers that facilitate donations to charities, and we just listed some of them there. We work with them all the time, and so if you have a deal that you're doing, all I will say, just big picture here, is the devil really is in the details. Whether it is structured as a fiscal sponsorship or a donor-advised fund, whether you're doing it as a roundup program where your consumers click and they're told that they're rounding up and giving to a charity that they think they've recommended, there may be an intermediary charitable platform in the middle there. Maybe it's Benevity, maybe it's one of the others. They need to be told that. And so the devil's in the details on the disclosure and the transparency, and also on the grant agreements and donor advised fund perhaps agreements in between. So this is just a sort of a flag to really be careful about the details, but they really are helpful if you don't want to launch your own platform. Okay, next slide. I see where you were going there. And we might have to end on this note and follow up later on some of the other points, but I did want to flag for people. I think you all know that this area is really hot, and disclosure and transparency are the name of the game. And this is what state attorneys general are increasingly focused on. There was a PayPal giving fund settlement with 23 state attorney generals a couple of years ago, you probably saw. Well, the most recent splash in the regulatory framework for these charitable platforms is legislation that just passed in California, October 7th. It's not going to take effect until a year from now, January 2023. So we have some time, and we're hoping to get some interpretive guidance, some FAQs at least soon and before it goes into effect. But for now, just know that California is the first state that is specifically going to be targeting online charitable giving platforms for definition and for registration. Some of the platforms that are covered by the definition of charitable giving platforms already would have been covered by CCV definitions, professional fundraiser definitions, fundraising council definitions before. But some platforms that may not have thought of themselves as online charitable giving platforms will find themselves covered by this law. So it's registration, it's disclosure requirements, it's all the things we've talked about in the CCV context, except I think that you're gonna find it a little bit broader. One practice point: if you do right now, if you're a brand that does CCVs with 6 or more charities in a year entirely online, the law as drafted will call that a charitable fundraising platform, which would require registration. Under California's law now, pre AB 488 taking effect, it wouldn't require registration. It would just require that you had a written CCV agreement in place. So that's just one example of a little change. If you have under 6, you're not online, you're not only registering online, you may still trigger other sections of California law, but you're not going to be deemed an online charitable giving platform. We will expect to see guidance on this, but we'll also expect to see more states following California's lead. I think we should stop here, Narissa, but I do want to point out, we'll send you all, we had a couple of slides at the end that we were going to talk about factors to consider when you're choosing which of these various structures works best for your brand when you're choosing how to engage with charities, whether you need a corporate foundation, whether DAFs are best for you, whether one of these third-party platforms is good. So we'll send you those factors in a follow-up email.
Great. And then we did have one question that I thought you might want to answer. Would a matching campaign for every $1 you donate, we will match, qualify as a commercial co-venture?
In some states it would. I would put that in. Definitely the goodwill states would consider that a commercial co-venture because you have to take an action. But in some states it wouldn't. Okay. Sorry, I don't mean to hedge, but that is how it falls. But let's follow up on it.
Well, I think that we are out of time, and we will be able to send some of these client alerts to you and some of the last slides over to you, and maybe some of the videos. So thank you so much for coming. And if you have any questions, please feel free to reach out.
Thanks for joining us.